Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now here's your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which is, of course, sales tax. And today we're going to delve a little bit into taxability. But before we do, let me introduce you to my co-host, Ellie Moffitt.
Hey everyone, really great to be here. Thank you for listening. Don't forget to like and subscribe. And before we get started, I'll do a quick introduction for Sales Tax and More. We are a full service consulting and solutions firm, and we have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, consultations, research, audit defense, exemption certificate management, and like our name states, more. So if you have questions about our services, please reach out and ask. We would love to hear from you, and we would love to work with you as well. So Mike, can you give us a definition of TPP? And I know if you just listened to our other taxability podcast, we're a little bit picking up where we left off on TPP, but can you give us a quick definition of TPP?
Yeah, absolutely. TPP stands for Tangible Personal Property. And tangible personal property, in direct contrast to real property like buildings and real estate, um, or digital property, or intangible property. Um, Tangible personal property is something that's perceptible to the senses, something that can be touched, something that can be smelled, something that can be seen. It's something that can sit on a shelf, be stored in a warehouse. That's what we're talking about when we say TPP. Now, the word personal trips up a lot of people in there. And as we mentioned on the last podcast, it's not just things we can carry around on ourselves, on our person. It's something that like a plane or a truck or a tractor. These are things that are perceptible to the senses also. So don't let that word personal trip you up. It's anything that is pretty much perceptible to the senses. Now, something else. Sometimes states define in their statutes what can be considered TPP. For example, electricity, when I think of electricity, I don't really think of that as tangible personal property. But in many states, it's identified as tangible personal property. I mean, if you stick a fork in a socket, I guess it's perceptible to the senses. But that's something that, I generally would not think of. Or downloaded software. If I'm downloading something, I usually think of an intangible property or a digital property. Yet some states define software, no matter how it's delivered, as tangible personal property. So it doesn't always follow, sales tax doesn't always follow common sense. We have to look at the way that states are interpreting certain things. And if they define software as tangible personal property, that's how they're going to treat it. And tangible personal property, as we mentioned in the last uh, podcast, is going to be taxable unless there's some sort of specific exemption.
Perfect. Thank you so much, Mike. So talking about TPP, can you talk more about how it's incorporated into real property and explain what real property means in this instance?
Yeah, real property is real estate. Could be land, could be building, could be a warehouse. And warehouse is a type of building. Um, but real property is generally not taxed. And if you're taking tangible personal property and incorporating it, that simply means making it a part of the real property. Then that, since real property is not uh, generally taxable and you're making something a part of the real property, then it's not going to be taxable either. So generally, the person who's incorporating it, usually a contractor, they're the ones who are considered the final consumer. So the tax is paid by them on any of the materials or supplies they use to incorporate it into real property. Now, let's get in an example of something. Maybe you buy a door and you have someone install the door into the house. Well, now that door is part of the house. So that's what incorporating it into real property means. So you wouldn't charge the customer tax on that door. The the person installing the door is usually responsible for either paying the tax at the time of purchase or paying a use tax when they go ahead and incorporate that door into the real property.
All right, thank you so much. So what about TPP that's used or consumed in manufacturing?
Yeah, tangible personal property that's used or consumed in a manufacturing property is often exempt also. Now, the problem is every state defines the manufacturing process a little bit differently. When we say defines the process, when does it begin? When does it end? Um, so uh, Something that's exempt in one state may not be exempt in the next. I'll give you an example. Here in Texas, if you purchase a forklift, you got to pay tax in that on that. Where in other states it may be tax free because if you're using that forklift to move items from one part of the manufacturing process to another, in other states, that's still considered part of the manufacturing process. Here in Texas, that's not considered part of the manufacturing process. That's considered interplant transport. So it's not being used in exempt manner. So same forklift, uh, could be same manufacturing process, two different states. One's taxable, one's not. Um, so I'll give you another example. We were at one point doing a audit defense for a company, and they had purchased two cranes, and they purchased them both tax free. And when an auditor comes out there, they don't just look at your sales to make sure that you're collecting the right amount of tax and remitting all the tax that you collect. They're also looking at your purchases to make sure that you're paying tax on all the items you purchase where tax should have been paid. Just because the seller doesn't charge you tax doesn't mean it's tax free. Sometimes you have to self-assess and remit it as a use tax if you didn't pay a sales tax. So these two cranes were about maybe 25, 35 yards apart. And one of them was used to move items from one part of the manufacturing process to the next. And the other one was used to move items from when they came off the assembly line into trucks at the loading dock there. 50 yards apart, same exact crane, moving items. The one that was being used in the manufacturing process, they were correct. They could have purchased that one tax free, and they did. However, the one that was loading the trucks, that was outside of the manufacturing process. So they should not have utilized or they should not have utilized an exemption for that. They should have paid tax on that. So they had to pay the tax as part of the audit. Now, if that crane was being used to load something, taking it to temporary storage, that's a whole nother story because in a lot of states, the movement of items to the storage area is considered part of the manufacturing process. The loading of a truck for delivery to customers, not part of the manufacturing process. So, how something is used, where is it in the manufacturing process? Uh, in that later example, both of them are taking finished products off of the manufacturing line or the assembly line, but one is putting them in a truck, one is helping move them to storage. So, again, taxability can get very, very granular. Facts matter. And same exact items used slightly differently can have a big impact on taxability.
Thank you so much, Mike. Anything else you want to add in here?
Now, just something we mentioned on the last podcast. In general, tangible personal property is going to be taxable unless there's some sort of specific exemption, and services are generally going to be exempt unless they're specifically identified as taxable. Now, as soon as I say that, people say, well, services are not exempt. That's not true. More and more services are being taxed by more and more states every year. And I don't know of a state out there that does not tax at least some services. Let me rephrase that because someone called me on this. I don't know of a state with a sales tax that doesn't tax at least some services. Someone will always come up and say, well, the state of Delaware doesn't have a sales tax and they don't tax any services. Absolutely right. All states with the sales tax, though, tax at least some services.
And Mike, one more question for you really in here. What would you say to somebody who's having taxability issues that's listening to this podcast because they're completely lost? What what next? What's next for them?
I can tell you generally what not to do. Generally, you don't want to call a state and ask them, is this taxable or not? Uh, because a verbal answer from the state doesn't hold any weight in an audit. You can't say, well, the state told me this, because, the auditor is going to say, well, did you get it in writing? So you don't want to be calling the state unless you ask the state to put it in writing. And generally, they're not going to do that. What you can ask them is, hey, this is a great answer. You really helped me out, but, my boss is going to really want to see something in writing. Is there any publication or statute that you can point me to that documents what you're saying? Um, and when they do that, you got to look at it because what they point you to may directly contrast what they just told you. The people who answer the phones at the state, some are smarter than others. Some states are better than others, but you can call a state 5 times in a row, get 5 different people, and get 5 different answers to the same question. So that's what you don't want to do. The other thing is you don't want to use AI. Everyone thinks that, oh, I've got AI now and I can just go to the internet and have AI do a search. Well, the internet is full of misinformation, especially when it comes to sales tax. So if you're asking an AI, all an AI does at this stage is search the web a heck of a lot faster than you can. So that's really what an AI is doing. So if it's looking at faulty information, it's going to give you a false sense of confidence because it's going to tell you, hey, here's the answer. And it could be an absolutely wrong answer. I've also heard about stories of some AIs making things up. So at this stage, I would not call a state and accept a verbal answer. You got to ask them to put it in writing, or where in writing is it? And then you got to check and make sure the writing is the same thing that they've told you. You don't want to, do an online search or use AI. What you got to do is some old-fashioned research, and you can do that yourself. A lot of times, the states have some states have a lot of great information on a website. Other states, not so much. There are research sources out there. We actually have 3 or 4 different that we subscribe to. They're not cheap though, so if you don't have a need for a lot of answers, maybe you want to reach out to someone like us and ask them to utilize their research subscriptions in order to get you the answers that you need. Another thing you don't want to do is play follow the leader. A lot of people say, well, hey, this company is a big company and I'm going to do the same exact thing that they're doing, assuming that they're going to be right. And unfortunately, that's not the case. A lot of times the bigger companies have a lot of turnover and, someone may be brand new at their job and they're getting it wrong, or someone may be there for 30 years, and they're doing it the way that it used to be done for a lot of different reasons. Big companies get things wrong also. So you want they're not going to pay any of the penalty or interest if you get audited. So you generally don't want to just copy what they're doing. I can give you example after example where someone was playing follow the leader, and they said, well, everybody in our industry does it this way. And they say, well, the state says, well, tell me some of your competitors and we'll go after them also. So a lot of times the state will target a specific industry because they know that everyone in that industry is doing it wrong. So you don't want to play follow the leader. The only way to get taxability right is by doing old-fashioned research. And you can do it yourself, or you can hire someone like us to do it for you.
All right. Well, thank you so much, Mike, for all that information. If you have sales tax needs and services, if you want to hire us to help with your taxability issues, please reach out. You can reach out to me directly at emoffat@salestaxandmore.com. You can also go to our website, salestaxandmore.com. And if you have anything in addition to our services that you need, check out our free webinar series and the free resources on our website as well, along with what we call our Salt Vault, which is a paid research source. So thank you again for joining us, and thank you, Mike.
Thank you, everyone. And we hope to see you on the next episode of the Sales Tax and More podcast. Bye-bye.
Thanks for listening. Be sure to hit subscribe and check out all the resources we have out on the web.